The stock market is showing some pretty interesting activity this week as we get into Christmas.
Yeah, it's kind of unusual to see this much action with the holidays right around the corner.
Right. The NASDAQ's pushing toward those record highs again.
And the S&P 500 just climbed above 6,000. That's always a big psychological level for investors.
Definitely. It seems like we're seeing the classic Santa Claus rally in action.
You're right, that period where the market tends to rise during the last 5 trading days of the year and the first 2 of the next.
But what's really interesting to me is that it's not this broad market surge,
Yeah, it's much more selective. Certain sectors and stocks are leading the way.
which presents some real opportunities for stock pickers.
For sure.
So let's take a look at what's driving this rally. The NASDAQ strength seems to be coming from, well, where else? The tech sector.
Definitely. And within tech, it's all about artificial intelligence. I mean, just look at Nvidia.
They've been on a tear lately.
Yeah, they just broke through some key resistance levels, which is a pretty strong buy signal for a lot of traders.
I saw they're up over 10% since that low they hit earlier this month.
Yep, and it looks like they might even be forming a double bottom base on the charts.
Interesting. So what's the buy point on that?
146.54.
Okay, something to keep an eye on for sure.
Definitely. And Nvidia's not alone.
True. We've seen Broadcom just surging too, right?
Oh, yeah. Up almost 50% this month.
That's wild.
It is.
Yeah.
And even some of those newer AI chip companies like Astera Labs that IPO'd recently, they're on a hot streak as well.
So is AI the sector to watch right now? I mean, it's kind of feeling like it, right?
I think so. It's got this amazing combination of things driving it, strong earnings, huge potential for growth, and maybe even some holiday cheer sprinkled in there.
Yeah, maybe. Now, another company that's been making headlines is Tesla. They jumped over 7% on Tuesday.
They've been on a nice little rebound lately.
Yeah, getting pretty close to that record high again.
It seems like the strong sales they're seeing in China are really giving them a boost.
And there's all that buzz around their self-driving tech, the AI stuff, the robotics ventures.
It's like they're involved in everything these days.
Plus, you can't forget that Elon Musk is a key advisor to the current administration.
Right. There's a lot of speculation about how that might benefit Tesla down the line.
It definitely adds another layer of intrigue. And then we've also got A-Tour Lifestyle Holdings.
The Chinese hotel operator.
Yeah, they're getting pretty close to a buy point too.
That's interesting. It suggests that maybe travel and hospitality are finally starting to pick up again.
After being hit so hard for so long.
Exactly.
But here's the thing. All this growth we've been talking about,
Yeah,
it's not happening everywhere.
that's a good point.
A lot of the market isn't really keeping up with these high flyers.
True. We're seeing a lot of divergence.
And that can create some instability, right?
It definitely can.
So I think the key takeaway here is that this is really a stock picker's market.
Without a doubt, you really have to choose carefully right now.
You can't just ride the overall market wave.
Nope, not this time. It really does make things tricky for investors.
So let's dig a little deeper into this AI sector that seems to be on fire. What's fueling all this growth?
Well, the demand for AI chips is just exploding. I mean, they're the brains behind everything from self-driving cars to all those advanced data analytics companies are doing.
And Nvidia and Broadcom are in a prime position to capitalize on that.
Absolutely.
I mean, we were just talking about Nvidia's surge and that potential double bottom base.
Yeah.
They're the dominant player in AI chips, no question.
Yeah.
But what about Broadcom? What's driving their growth?
I mean, they're benefiting from that same demand for AI chips. They've really positioned themselves well in this market.
And even some of the newer companies like Labs, they're performing well too.
Yeah, they've really carved out a niche for themselves, focusing on those high-performance AI chip solutions.
So it just goes to show you there's a lot of opportunity within the AI space.
Right.
But it's not just the hardware. It's the software and applications that are driving AI too.
Oh, for sure. The software is the intelligence, right? It's what allows these machines to learn and adapt and solve those complex problems.
So investors need to be looking at both sides of the equation.
Definitely.
Now, another company that's really been capturing investor attention lately is Tesla.
Yeah.
Why are they surging?
Well, their sales in China are strong. They're continuing to innovate in electric vehicle tech. And let's face it, Elon Musk is a visionary leader.
He definitely gets people excited.
He does. And all of that has really positioned Tesla as the leader in the electric vehicle market.
But they've also faced their fair share of challenges and controversies along the way.
Oh, absolutely.
So how should investors weigh all of that when considering Tesla?
It's important to recognize both the opportunities and the risks with Tesla. I mean, the electric vehicle market, it's competitive. It's evolving rapidly.
Yeah.
Tesla's going to have to maintain that technological edge. They've got to navigate those regulatory hurdles. They've got to manage production efficiently. It's a lot to juggle.
Now, speaking of industries that have been hit hard, the travel sector seems to be showing signs of life again after a really rough couple of years.
Yeah, we've seen some positive indicators lately.
Like O-Tour Lifestyle Holdings.
Yeah, the Chinese hotel operator. Their performance suggests that maybe demand for travel and hospitality is starting to come back as those travel restrictions ease.
And as consumer confidence returns.
Exactly.
So that's a potential opportunity for investors who are looking for growth outside of the tech sector.
For sure.
But I keep coming back to this divergence we're seeing in the market. You've got these high-flying sectors like AI and tech, and then you've got other sectors that are lagging behind.
It does make you wonder about overall market stability.
Exactly. So how should investors approach this kind of uneven landscape?
It's all about selectivity and diversification. Investors need to focus on companies that have strong fundamentals, good growth potential, and resilience, regardless of the sector.
So we've talked about some specific sectors and companies, but let's zoom out a little bit and think about the bigger picture. What are some of those broader market forces that could really shape the investment landscape next year?
Well, you've got to consider the global economic outlook. You've got geopolitical events. And then, of course, there's always technology, which is constantly evolving.
Right. It's like those are the three big wild cards.
Exactly. And they all kind of feed into each other, too.
Okay, so let's break it down. Starting with the global economic outlook, what are some of the trends investors should be paying attention to?
Well, there are those inflationary pressures that are still lingering. And then central banks around the world are raising interest rates to try to combat that.
Which could slow down economic growth.
Exactly. And some economists are even predicting recessions in some major economies. So that's something to keep an eye on.
Definitely. Now, what about geopolitical events? It seems like they're having a bigger and bigger impact on the markets these days.
Oh, yeah. I mean, you've got geopolitical tensions, trade disputes, political instability in different parts of the world. All of that can create a lot of volatility and uncertainty.
So how do investors navigate that?
It's really about staying informed, keeping up with those developments and trying to assess how they might impact your investments.
And then there's technology, which never stands still.
Never. And that's what makes it so exciting, but also challenging for investors. I mean, you've got new innovations popping up all the time. Some of them create amazing opportunities, but others can disrupt entire industries.
So how do you separate the winners from the losers in that kind of environment?
Well, you've got to be able to adapt, and you have to think long term. Try to identify those companies that are really leading the charge in technological advancements.
So with all of these forces at play, what are some strategies investors can use to navigate the year ahead?
Well, I think diversification is always key. You don't want to put all your eggs in one basket.
Right, spreading out your risk.
Exactly. And then risk management is important too. Having a plan in place for how you're going to handle those inevitable market fluctuations.
And not getting caught up in the short-term noise.
Right. Focusing on your long-term goals.
So as we wrap up here, what are some key takeaways for investors to keep in mind?
I think the biggest one is that the market is unpredictable. You can't control what's going to happen.
So embrace the uncertainty.
Exactly. And stay informed, keep learning, and don't be afraid to seek out expert advice when you need it.
That's great advice. Well, this has been a really insightful discussion. Thanks for joining us.
It's been a pleasure.